How's it going?
Teach me.
Teach you?
I'll be your Padawan.
Right.
Your Padawan learner.
No, it's interesting because I look at everything and I'm like, I'm just here to learn, man. You know what I mean? Like just talking and discussing stuff every week, and I take stuff away every week.
Oh, me too. It's nuts. We kind of come in with maybe an idea of what we're going to do or say, and then by the end, it's like, man, I really understand that. Which, when do we take time to actually talk something out in real life?
Yeah, and have a good conversation.
Mm-hmm. Yeah, we're kind of forced to in this, which is really cool. And engagement. Like, I'm not going to be over here answering text messages and phone calls and stuff. And so then it makes us be engaged.
Yeah, focus on it.
It's pretty cool.
It is.
Like the stock market or like crypto.
Yeah, let's dive into it.
Gold and silver.
Mm-hmm. Yeah, investing, right?
Yeah. So investing is something that I think when people hear that word, they think of financial advisors or stockbrokers, things like that. And there is that.
Yeah.
There's that, which is great. That's a very vital part of the market. But something that maybe people don't know is they can do a lot of investing on their own. We don't have anybody else do our investing. Mm-hmm. We do everything ourselves.
Yeah.
Not that that's what everybody should do, but it'll be fun to just talk about investing, all the different ways that people can go. And this doesn't even have to be for people that are looking at starting a side hustle. This can be someone who is already established in business or has a job and has a little bit extra money and they want to put something away, whether that's, for Christmas next year or retirement, whatever it is.
Yeah.
And there's so many avenues. That's the thing too. Investing goes in so many different directions. Like we talked about collectibles the other day. Mm-hmm. That's a way of investing. There's real estate, there's gold, there's silver, there's cryptocurrencies, there's stocks, there's bonds. And then within all of those, there's leveraged trading. And so it's interesting. I just figure we can kind of get into it, maybe start small and then work our way a little bit bigger. Like what can the layman do today? And then once you've amassed a good fortune, what can we do then? Yeah.
No, I like that. I think the big key to investing successfully is just, the key to life in general, it's education.
Yeah.
If somebody's not educated and not willing to put in the time to learn a little bit, and it really doesn't take that much, I don't feel like, to, say you're curious about gold, and so, whether you should buy gold or not, you can get information relatively quickly now to become pretty well educated on whether or not gold is a good thing for your scenario or whatever. Yeah. If people aren't willing to look into that, then it's probably wise to have somebody manage that for them that is going to be educated. But I think the amount of education that we have available to us anymore, and it's hard, you have to kind of sort through a little bit of it and figure out what's right for your situation, what people are trying to take advantage of you, and which ones are giving good education. But we have so much education available to us that I think that that's an important part, is just becoming educated in something. And the more that we are able to do things ourselves and be our own stewards over stuff, the better.
I agree, which has to do with the other thing. So you said education, and I totally agree, and practice. Mm-hmm. So just actually putting that education to work. So a lot of times people will come and say, hey, cryptocurrency, because I'm all about cryptocurrency. I think it's the future. I think it's amazing. So, hey, tell me, should I invest in Bitcoin? And what's this Ethereum thing? And I'm like, buy $100, buy $10, buy a little bit. And if you can lose $10, buy $10. Just because once you get into it and you start to look at the percentage change and you go, it's up 10% today, sweet, I'm making bank. And then the next day it's down 20%. You're like, oh crap, I'm losing. I've lost 10% of my money. Like it's really good for the mind and the soul to just dive in a little bit and try it at a very small scale, which really is cash calf, right?
Yeah.
Like a little smaller scale. But when people can get in, they're going to find a lot about themselves. They're going to find what happens when you lose 10%. When it goes down 10%, and I don't believe that you've lost 10% until you've sold it. But when it goes down 10%, how do you react? It's funny. We've tried to instill this into our kids a little bit. If you ask them, you're like, hey, what happens if Bitcoin goes down? Buy more. We've just tried to really instill that into them, because most people are not taught that. And they panic sell. They're like, it's down 10%. It might go down 20%. I better hurry and sell. So the nice thing is, get in, leave it alone. See what it does. One of the best things that I've done lately is I transferred some money out of one account to another, and I started playing with a smaller amount. And I can't day trade it because you'll get flagged as a pattern day trader and it won't work. Well, it's been really good for me because it forces me day to day to be patient.
Yeah.
So if I buy one today and it goes up 20% because I'm trying to leverage, or let's say it goes up 20%, I want to sell it, I can't, because it'll mark me as a pattern day trader. Well, I've learned in the last few months of doing that, I'm way better because I'm forced.
Not emotional.
Yeah, it's not emotional. It's like, man, I have to wait till tomorrow. And then tomorrow comes around and it's 35%, 40%. It's pretty crazy. It's actually really cool.
Yeah, there's something about that patience part. You know what I mean? I think when people buy in on something, say you put $100, say you're like, I don't really care about Bitcoin, whatever, you're not going to educate yourself, but I'll buy $100 worth. You buy $100 worth, you are going to educate yourself because you're invested in it.
Yep.
I think I've kind of always done that too, just from an education standpoint. I'm more motivated to educate myself about it and learn about it when I have a little bit of skin in the game. That's not to say you throw a ton in all at once at the beginning. Yeah. But, but then just that patience thing, like you said, getting them, can be a roller coaster, especially if you're looking at it every day. And we have the ability to do that now. Yeah. Whereas in the past, or even maybe in a 401k, people are like, I'll look at my statement once a year. Yeah. And it's good to go. I think, was it Warren Buffett that's like, everybody would do better if they could only check the price of their stock once every couple months or something like that. And it's totally true, because we can check it minute by minute by minute by minute, and it can drive us nuts. So I think that patience aspect and so it's fun. And as inflation continues, which I think it will, volatility is also going to increase. So you say volatility to someone who's saving for retirement, it's like, oh no. Like volatility in that regard is bad. Financial planners will show you compounding interest over a 30-year period, but it never accounts for 5 or 6 of those years where the market decreases. Yeah. If the market decreases, it messes up that whole algorithm, especially if it's at the end of the 30 years. Yeah. Yeah, exactly. Yeah. So that volatility can be scary. For someone who's trading right now, that volatility is amazing. You can almost watch the chart and you're like, it's up right now. So I'm not going to buy it. According to this chart, it's down from that trend line. Let's just buy a little bit. Like, trying to be very common sense about it and not emotional, it's actually pretty doable. And I don't think I know a lot about it. I just watch the trend lines. And if it's high, I just don't buy it. Mm-hmm. But if it's down, but it's been trending up, then you buy it. And that's cryptocurrencies, or that's stocks, and then it's the opposite if you're going to bet against it. And with inflation. Yes. I mean, especially things that are somewhat hard money, commodities. Bitcoin's not a hard money, but it's a very limited supply. Any of these things, with the amount of inflation, everything shouldn't even say that. Everything besides dollars if you pan it out in a long enough time frame, everything goes up. It's just being patient enough to wait on, you know what I mean? To wait for it. Even if you're down 20, like I've taken quite a few educational, things, courses or whatever on trading. And I think it's important too to highlight the difference between maybe somebody is a trader and they are trying to trade in and out of stuff within a very small window of time.
Yeah.
I see that differently as like an investor that's saying, well, I'm just going to, like somebody that's going to invest for retirement or something.
Yeah.
I see that more of a longer term thing as an investor. It's
Yeah,
kind of
for
how
sure.
I look at it.
Yeah, that makes sense.
But I was, listening to some of these people that are just incredible investors, and they're like, yeah, like everybody's freaked out about the volatility right now, And one example that sticks in my mind is a guy's like, yeah, I remember when I bought Berkshire Hathaway, and it was like back in the, whatever, like 30, 40 years ago. He's like, I bought it and it went down 40% right after I bought it. And he's like, but you look at it now, he's like, I still have that same position, plus some I've added to it over the years. He's like, you look at it now, I can't even find that little, he's like, I can find it, but you have to zoom way in to find that little blurb of where it dropped 40%.
That's cool.
Because over time, it's grown so much.
Yeah, think of Facebook and really any tech stock.
Yeah,
a lot
I
of
think
times.
I remember when Facebook was like $20, I think, or maybe it was 40 when it first got listed.
I don't even remember.
Maybe I'm crazy, but I mean it is amazing how stuff grows over time.
And a lot of tech stocks will be, the Donald Trump social media platform. People bought in and it just crashed. And now it's like on its way back up and everything. But you just kind of know like tech stocks are going to take that dump. And that's fine. Dumps mean buy. And that's whether it's stocks or cryptocurrencies. You had mentioned hard money. Can you explain what that is?
Yeah, so sorry, I was going to look up to see exactly what Facebook got listed for. Not that it matters, but it's just interesting to highlight. Maybe I can't pull it up quick. I'm not like Jamie or any of those.
People who are listening and not watching, what's going on right
Yeah, I know. I'm trying to
Google because it's called
Facebook.
Well, it's called Meta now.
Yeah.
So that's partly why.
I'm seeing if it'll come up.
So I'm only on a 5-year chart, but at the end of 5 years,
I found it. So strong demand, especially for retail investors. Ultimately, underwriters settled on a price of $38 per share when it first got publicly listed. And so now you look at it and what is it now, 350 or 60 or something like that?
Well, that's actually an interesting thing.
Yeah, because it's taken a hit.
But now it's at 194. So here's the cool part.
But even at 194, so $38 to 194.
Yep.
And if you went back to where it was 3, 4, or 5 months ago, it had 10x'd.
Yeah, that's awesome.
And I remember when it first got listed, it actually dumped big time too. I think it got listed at about that $38 a share. I think it went down to like half of that right off the get-go, or like, how there's volatility. But I mean, just not to go into the weeds or down.
No, I think it's cool.
But it's just interesting that emotion, you can take some of that emotion out, the more patient you are and the longer your time horizon gets to, and kind of understanding what you're in it for.
Yes, I like that because I really wish there was a way that we could like show this on the screen right now.
Yeah,
and maybe cool. maybe there is. We'll send it to
down the road. We'll get more tech.
Yeah, we'll send it to John. But if you look at, so if anyone is listening and they're like really curious in this, just pull up. It's Meta now, so Facebook, FB, Meta Platforms, which is Facebook. Mm-hmm. If you pull up the 5-year chart and you look at the highs, they all are trending up, and you look at the lows, they're also trending up. Mm-hmm. So if you're not looking at this over the last 5 years, it's just continued to go up, whether it goes up or down. I hope that makes sense. Mm-hmm. Well, on a 5-year chart, so what you just said, depending on kind of your time horizons, right now is an incredible time to buy Facebook.
Yeah. It's almost half of what it was at its all-time high.
Yeah, and trending up. And if you go off of the trend line, it's about to bottom out and go up. Mm-hmm. Really, after this, I might try to sell some stock and buy some options in Facebook because looking at that. But then if you go to a year, you're like, oh, yeah, that looks bad. You go to 3 months, downtrend. So it really just depends on the time horizon.
Mm-hmm. And it might trend downward for the next year too,
Yep.
But I think it's important too to look at the overall, like obviously there's some companies that suck and or something happens
Yep.
and they're never going to come back. And so I think it's important too to educate yourself on what is the outlook for Facebook.
Yeah.
Honestly, with the metaverse stuff they're doing and everything else, like I don't necessarily agree with everything Facebook's doing. I don't love Facebook, but the way that tech is evolving, I think Facebook outlook's pretty good.
Yeah, for sure.
Over the long run.
I'm right there with you.
And so I'm like, but there is some companies, we talked about like pharmaceuticals right now are getting hammered.
Yeah.
They might not come back for quite a few years off of those highs because we've just had a huge event that caused a huge influx of capital to them or whatever. So I think it's important to educate no matter what asset. Just education.
For sure. I 100% agree. And let's say it does downtrend over the next year. What do you do when it goes down?
So I think it goes back to whether you're a trader or whether you're an investor. And I used to be kind of a trader, short-term type trader. I would probably categorize a trader as somebody that's going to be in a position for 0 to maybe a year or something like that. Maybe. I don't know. I don't know exactly what to, but if it's in a downtrend and I'm a trader, then there's ways to profit off of the downturn. That's where options come into place, or futures markets. You can go in and you can, you can buy put options. And that's something that's going to increase in value as it goes down.
So a put is a way to essentially bet against a company.
Yeah. So, and this gets way off in the weeds.
It is. It's tough to explain.
It would be fun to do a whiteboard, get in front of a whiteboard and really talk about what options are. So put options are the right to sell a stock at a certain price.
So I have 100 ABC stocks.
Mm-hmm. Yep. So if you own the stock, if you sell it, so you don't have to own the stock necessarily to buy an option.
That's true. You just have to have the money to own the stock.
Yeah, you have to so with a put option, and it's so weird because you can technically sell stock before you own it, and that's what you're doing with a put option. Is you're saying, Facebook's at 190 today.
Yeah.
And I think it's going to go down. So I'm going to buy a put option at 190, and that gives me the option, but not necessarily the obligation to sell at 190. So even before I own the stock, I can put that position on.
Yeah.
If it goes down to 170, well, I can sell it at 190.
Yeah.
And I can buy it back to close out my position at 170, and so I just made $20 of profit.
Yeah.
But that's so hard. It took me so long to wrap my head around options and the capabilities there.
Yeah.
But they are cool. They are
really
very cool.
They're probably more for the seasoned investor. If someone's listening to this and they've never downloaded a trading platform or a stock buying platform, it's good to just get in and, hey, what are you passionate about? Just buy a few shares of a stock, depending on the cost. Like I think Google, I don't remember what theirs is called. It's like Alphabet. I think it's called Alphabet.
Mm-hmm. Yeah.
And it's expensive. It's like you buy one share, it's $2,000. I don't know what it is right now, but it's pretty high. So, you can't just go buy a few of those right now. But ExxonMobil.
Yeah, anything, say somebody likes eating at McDonald's,
Yeah.
and you think McDonald's is going to do well.
Yeah.
Well, you can. That's the cool thing about stocks. You know, we talk a lot on this podcast about business and starting our own businesses, and there's a lot of value to that. But you can go buy a part of an already existing business. You can go buy a part of McDonald's. You can go buy a part of Nike.
Yeah. And that's what stocks are. I think maybe we've done this for a little while, so we kind of take it for granted.
Yeah,
but
we're kind of jumping in the deep end, which is good.
Stock is that you're literally buying stock in the company. You're buying a portion of the company. So, you know, when there's shareholder meetings and that sort of thing, you now have a say in it. Now, sometimes those companies are structured to where you have to have a certain amount of shares in order to have, you know, a verbal say. But, you know, I could go own part of McDonald's today.
Yeah.
I just have to buy the stock. In fact, let's look what it is. Maybe we'll go own a part of McDonald's right now.
Well, and there might be 1 billion shares of McDonald's. And so you're buying one stock out of 1 billion, you know, but you still are entitled to certain, you know, if the price of that stock and that company's doing good and they sell more hamburgers, then you get to share in the profits of that because the stock price is going up.
Yeah.
There's also companies that pay out a dividend. Some do, some don't. But say, you know, if McDonald's, and I don't know if McDonald's pays out a dividend or not, but say they're doing good and they decide, hey, we're going to pay out a portion of our profits to dividends back to our stockholders. Well, then each quarter or however often they decide to do that, you get a little kickback in your investment account from them paying out a dividend. So it's kind of cool. You get some cash flow.
Yeah.
You know, there's different ways to invest. You think about investing in maybe a rental property and people are paying you rent, you know, that's your return on investment.
Yeah.
With stocks, some of that cash flow is getting a dividend.
Yeah.
And that's a super simple way to do it. You can also generate cash flow with options and stuff like that too if you want.
Yeah.
But that takes some more education. A simple way is just to buy the stock and get the dividend.
And McDonald's does have a dividend. So
nice.
You know, if people want to look into it, I do not think that McDonald's is a place that you should go eat, but maybe it is a place that you invest in. And looking at the trend line over the last 5 years, right now is probably a good time. If you want to hold it long term, you look at the lows, you look at the highs. Right now, in the last year, in the last 3 months, we're down. It's weird.
I wonder if that's do you, and it's interesting too because there could be some external factors to look at too. Is that caused by the inflation we're seeing, and so less people are going to eat at McDonald's? I don't know.
It's definitely
but
possible. Or I mean, it could be something as simple as people got sick of it over the last year and a half. So now that things are opening back up, they're like, man, I'm going to go to my local barbecue shop.
Yeah.
I don't know.
Or there was a national news story that somebody found something bad in their chicken nuggets. You know, I mean, there's that kind of stuff too that can affect it.
In the last month, I know it's gone, I don't know. So that's the other thing. In all of this is just things that we believe, we think.
That's where we say educate yourself.
Yeah, educate, yeah. I believe it's gone down because they pulled out of Russia and all the Iron Curtain.
Oh, interesting.
Yeah.
Sure. Yeah, that's a huge market.
So, hey, you take that out. Ooh, that's a lot of market share that's coming out. Now, all of the mom and pop shops in Russia are probably like, yes.
Yeah.
Finally.
Unless they're getting paid in rubles.
That's true. Yeah. You know, something else to think about. A lot of these markets are raising probably just because we continue to print more dollars. Mm-hmm. So it doesn't necessarily mean that it's going to be worth. It's tough to say. Like that it's going to be worth more. This is where debt comes into play. Because if let's say you buy a house right now for $100,000 and you pay it off. Well, let's say you don't pay it off. Let's say you have $100,000 of debt and then inflation goes nuts. And all of a sudden, because of that, your business is making $500,000 a year. I say because of that, because you can raise with the market.
Yeah.
And then all of a sudden, it's not that hard to pay off a $100,000 house because you're making $500,000 a year.
Yeah, and inflate it away.
It's inflated. And so it's difficult. You know, if we buy disposable things, then money can kind of burn through. But if you're buying assets, you're buying things that are going to last, you kind of can't go wrong. Like I know you are too, just silver, gold, cryptocurrencies, things that have a fixed supply, or at least we think they're a fixed supply, like gold and silver. I mean, maybe at some point we run into some gold mine that has 1 billion tons of gold in it. Well, the price would then probably go down because the supply is so high.
Yeah.
But things that we're pretty dang sure, so real estate, there's only so much real estate. Silver, any precious metals, lumber is even.
Yeah, look at all commodities right now.
All commodities. There you go. That's the way to say it.
Wheat, and maybe what we ought to do is kind of try to, we've talked about stocks. Now we could kind of, because there's only real like 4 or 5 asset classes really, you know, that people could invest in. Well, there's more than that if you go into like Pokemon cards and antiques
there's
and stuff.
There's
subcategories. The main ones. But you look at commodities right now, wheat traded limit up, I think 2 or 3 times a week ago. So limit up is like it goes up so fast that they shut the market off.
Interesting.
Because it's going up uncontrollably.
That's got to be inflation.
And so they've done it 2 or 3 times. Well, and yeah, part of it was already high, but part of it is this war in Ukraine and just different things. But it's just interesting to see. I think when it comes to investing, people get freaked out about stuff going down, which I can understand that. But so maybe somebody just parks dollars in a savings account, and we don't really think about it going up or down because it's fixed at $1. $1 is $1 is $1.
Yeah.
Well, if you look at it in comparison to what that dollar can buy, it does go up and down.
Yeah.
The value of that dollar does go up and down. And if we had a chart of, say, $1 versus lumber or commodities or whatever in the last year or 2 even, the dollar has crashed.
Yeah.
Like it buys $1 versus real estate maybe has gone down 30 or 40% in the last couple of years.
And lumber.
And so, but we don't, it's hard to make that connection and go, well, my dollars aren't really staying dollars. They are purchasing less as they're sitting in my savings account. And so that's why it's so important, I think, to get some of this stuff, especially having a long-term kind of view. Yeah. I don't know.
Yeah, no, you're totally right. I think you said I don't know, but I think you do know, because everything you just said, like if people follow it, it's just kind of going to work. I mean, we're not financial advisors, but if you just look at the dollar versus anything, really anything, there's an inverse correlation. The dollar continues to lose value and any asset continues to raise. Now that's in correlation to the dollar. So the reason why it looks like these things are raising is because the dollar's lowering. So I think we talked about this a few episodes ago. It was actually when the table was over there. So I don't know how long ago it was, but a gold ounce back in Roman times, I think this was Mike Maloney that said this. A gold ounce back in Roman times would buy you a really nice pair of sandals and clothes and like a tunic. Today, $2,000 will buy you like some really nice shoes, clothes, and a suit. And so if you look at what gold has done over the last 2,000 years versus the dollar, which is obviously way younger. I remember when my grandma talked about getting 5 or 6 pieces of candy for a penny. We remember penny stores. Our kids have no idea what penny stores are.
Yeah.
We know what penny candy is. They don't. My grandma used to know what fractional penny what store candy was. You could get 5 pieces of candy for a penny. Well, that doesn't mean that candy's worth that much more now. It actually just means that the dollar has lost.
Yeah. Well, back to your example of the suit and the ounce of gold. So, there was probably like back in the 1920s maybe, or maybe the 30s or something. Well, maybe even later than that. I don't know. at some point in time, a nice suit and shoes cost $20.
Yeah.
At some point in time.
Yeah.
You know, you could take a $20 bill and go in and buy a suit and tie and whatever. Also during that time, you could buy it with, you could either use the $20 bill or you could use the 1 ounce gold piece.
Yeah.
There was some point in time we could look it up and figure out exactly what year
cool.
it was.
Yeah.
So you could go in and you could buy a suit with that. Well, say you're like, okay, well, I want to buy a suit in 100 years. And so I'm going to put, today I can buy a suit with this $20 bill or with a 1 ounce piece of gold. I'm going to put both of those in the bank for 100 years and then take them both out and buy a suit in the future.
Yeah.
You would be able to still buy a suit with the gold piece. You would then take the $20 bill out and you wouldn't be able to even buy a pair of socks, you know, because the $20 bill would be worthless. Now, granted, a 100-year-old $20 bill in good shape is probably worth some antique value.
Yeah.
But as far as its dollar value, it just got devalued from 20 to probably like 2,000. You know what I mean? Like that is the dollar difference.
So
and so
crazy.
think about that in a savings account. You put your $20 in instead of putting gold in. Over 100 years, even over a decade, you get wiped out.
Yep.
You know, it's crazy.
It is crazy because it's simple. You know, let's say you put $100 a month, and this is actually something really good to touch on. I'll do this really after this.
Yeah.
So I wanted to look this up because I was curious. So when we were on a gold standard, it was the basis for the international monetary system, which we now know there's like, you know, the International Monetary Fund and that sort of thing, which is funny because it's not money.
Yeah.
It's currency.
Right.
It should be the International Fake Currency Fund.
Right. Paper fund.
Yeah. It was from the 1870s to the early 1920s, and then from the late 1920s to 1932, as well as from 1944 until 1971. So there were some temporary times when we came off of the gold standard, and I think that was during the huge economic downturns, which we could probably go in later on someday when we want to get in the weeds about how they did that and the creation of the Federal Reserve and that sort of thing. But that's interesting. So pretty much from the 1870s until the 1970s, we had a gold system. You could take that paper note and you could walk into a bank and say, "Can I switch this $20 out for an ounce of gold?" Oh yeah. And it was just interchangeable.
Well, and back to our savings example. So for a time that worked out. If you put both of them in your savings account, I guess that would have worked out for a while. They would have been the same value.
Well, if you
Once we went off of that gold standard, man, the value of that currency went down so fast, has gone down so fast.
Have you ever been to the website WTF happened in 1971.com?
No,
you should go to it.
Sounds great though.
Oh, it's so good. I mean, whoever made this website, I actually wish there was a way to pay you because it's crazy. So anyone listening, go to WTF happened in 1971.com.
Oh yeah.
And you can look at
that's a
all
perfect chart
of these charts from 1948 until today. Productivity has continued to go up, but compensation for that productivity has stayed pretty much level since 1971. Great. You look at GDP, like real GDP per capita or per FTE or GDP deflator. Like you look at all of these things, it has been crazy. Like our real gross domestic product has just skyrocketed, but that's because the inflation. It has inflated. It's not like our productivity has gone up that much. Our GDP hasn't gone up that much. It's just the inflated dollar.
It's just the dollar amount of the product.
Yeah. Income gains
this is cool.
Widely shared in early post-war decades, but not since then. So if you go to 1971 and you see pretty much the amount of wealth that people have and that they can potentially have, the bottom 20th percentile is the same. They've been the same over time, but then the wealthy have gotten very, very, very wealthy.
Yeah.
Which goes into velocity of money and things that are just kind of deep that we don't really need to talk about. What what is important.
I would say government collusion somewhat
Yes.
too in the last little bit.
Very true.
Which is something we could talk about another time too.
Yeah,
But
maybe
you know what I mean?
we should do an episode on the Fed and governments and that sort of thing. I think that'd be really good.
Yeah.
The way to combat a lot of this, and this is where after I read that thing I said I was going to go to, it is dollar cost averaging. I think dollar cost averaging in and out is the best way to do things. So if you're like, but I don't know when to buy McDonald's stock, cool, buy $10 a month.
Yeah, on the same day.
Yep.
The 15th, whenever you get your check, $10.
Yep.
$10. You'll hit the average. You will average over time. I love that. I love that. That's perfect.
It's good. And then people are like, well, but when do I sell? Well, it depends. If you're going to change that to a hard asset, let's say you've bought so much McDonald's over time and it's gone up, and a piece of property kind of goes on sale. You're like, I really want to buy that. Well, does that piece of property cash flow? Is it going to gain value? Cool. Cash it out and move it over. That's great. But if you're like, well, the market, I'm not really sure. I kind of want to cash out my McDonald's stock. What do I do? You can dollar cost average out as well. Maybe it's gone up. It's doubled since you bought it. Well, now take out $20 a week or $20 every 2 weeks when you get your check. And then you don't have to worry so much about the highs and the lows. You've dollar cost averaged in, you've dollar cost averaged out. You've doubled your money.
Yeah, I like that.
And if you double your money, maybe you're beating inflation.
Yeah, for sure. I saw on this website. I'm gonna have to look at.
Oh,
this website
it's an
'cause
incredible
there's some
website.
great. I love charts. Like
Yeah.
I really like looking at charts. So there's one here that says the 1971 cost of living. So a new house was $25,000. The average income was $10,000. So a house was about 2.5 times of the average income. I think the average house today is like there's a couple lessons here. Number one, if you would have put $25,000 cash in the bank in 1971, it would be pretty insignificant today.
Yeah.
Really. I mean, 25 grand's a good amount of money, but it's not like it's life-changing money. If you would have bought a house in 1971 with that 25,000, today it would be worth about 350,000. I think is about the is that the average new house?
Something around there, yeah.
So that just goes to show how valuable it is to be invested in things, in assets. The other interesting thing is, so the average new house was 2.5 times a yearly income of a employee. So you think about that now, like what's the average income now? Probably like 40 to 50, maybe. It might not even be that.
Sure.
It might be, but even if it's 50, I'll bet 50 is high for average income. I'll bet it's less than that. Even say it's 50, you're not buying a house for 150 grand right now. So the gap has gone bigger, which I think is exactly why we're saying start a business, invest, all of these things. So, anyway.
And that's the key is you don't have to have an extra $10,000 to be throwing into investments. Really, $10. I mean, you remember when I felt like crypto was gonna, and I mean, a lot of people felt it. Everything had dipped after COVID, and it was like, we gotta buy. Honestly, if we had an extra $10, it went into cryptocurrency.
Yeah,
because that $10 makes a difference. If that $10 can turn into 30, 40, $50, well, then that's actually pretty significant. Well, what's $10? It's a Big Mac and fries and a drink. I mean, since McDonald's is our theme today, it's a Big Mac. Well, we choose not to have that Big Mac. We eat at home and we invest that. It could be huge. And it can be completely life-changing if we're dedicated enough right now to just kind of start dollar cost averaging in. Or if we don't understand something, put a little bit of money in there. Just a little bit.
Yep.
Enough, because crypto could crash. The stock market could crash. I don't think either of them are going to right yet. They could. So let's say $10, $100, $1,000, whatever's a little bit to you, and see what happens and watch the trends. Is it going up? Is it going down? How do I react to that? Well, I don't like that I react like that. Okay, cool. Then let's fix that. Education, just like you said, educating yourself. I think education and practice, as far as investing goes, is the key.
for sure. Yeah. No, I totally agree. That's kind of how we, and I think that's how we kind of started out, or just putting away stuff. Is we found something that I thought it was cool, so we kind of started. I actually read in a book that somebody had, when they started investing, they would go buy silver rounds. And so I was like, that's an interesting idea. And kind of his reasoning behind that was, you're taking that money, you're converting it into a hard asset, which is a good thing. But actually, when I started it, the thing I liked the best about it was that was harder to spend. If I had a gold coin versus maybe a $20 bill or whatever it was, then in order for me to spend that gold coin, I would have to drive down to the pawn shop, trade it in, get my $20, and then go back and get it. And I was just so lazy. I'm like, I don't want to go do that. I don't need that new whatever pair of shoes or whatever it was, So then
True.
And it kind of also, I like to spend money.
Yeah.
And so it also kind of fulfilled that need too, where I was spending money, but I was spending it on something that would, hold its value and that I could continue to accumulate, and it would increase in time over time.
It's cool. It's interesting you say that because I've never sold any of our silver.
Yeah, or anything. I don't like selling anything, whether it's stocks or you know what I mean.
Guns.
Like I
Sell all your guns.
But the principle there too was, and this one's kind of a hard one sometimes for people to do and understand and have faith in, but pay yourself first.
Mm-hmm.
Take that, get your paycheck, take that $100 off the top. I pay tithing first.
Yeah.
I pay tithing to my church. After that, I pay myself.
Yep.
Take that $100 and go buy something with it that you can't readily spend. Whether that's, if you're interested in stocks, buy some stocks. If you're interested in silver or gold, buy some silver or gold. If you're interested in crypto, buy some of that. Whatever it is, and then do that every month or every 2 weeks or whatever. I know a lot of times it's like, well, how am I going to make it work at the end of the month? Well, you make it work because that's all that's left.
Exactly.
Whereas if you're like, well, I'll invest what's left over at the end, there's never any left over at the end.
There won't be.
And so if you can do that, and it's hard to think, well, okay, maybe I buy 1 or 2 silver coins this month, like big deal. Well, over time, you do that you do that consistently for a few years, those little babies multiply.
Yeah.
It's pretty cool.
So, I mean, a book that someone can get to, I can't talk today. I've been like putting in a lot of hours, just physical labor, and I feel like a wuss.
It's good.
It is good. The Richest Man in Babylon.
Yeah, that might have been where I got it.
I mean,
don't know.
When you said it, it resonated in that. It's let your gold multiply. Let your gold have babies, and then let those babies have babies.
Yeah.
Let them be rabbits.
Yeah.
Yeah.
And it's cool over time. It's amazing how that compounds. You pay yourself first, even if it's a small amount, and it could be crypto. Say you buy. I'm trying to even think what, like something. Find one that you like, or find one that is
I like
maybe
Cardano.
Yeah. So Cardano. What is it, $1 or something like that?
Yeah, it's lower than I want it to be.
So
no, I'm just kidding. Yeah, I think it's like 85, 90 cents right now.
Yeah, so even I'm going to buy 10 Cardano a month.
Yeah.
Well, after a while,
well,
you think 10. Well, that's not very much. Well, after a year, you got 120.
Yeah.
And once you start gaining momentum, it's fun. And so then you're like, I've got. This month, I think I can do 200.
Yep.
It's cool.
and give it some time too before it's judged too harshly. Because if you buy it right now and then next month you're down 20% and you're like, this sucks, I'm going to sell it. That's a very short period of time. We've made some good decisions as far as like buying it, letting it go up, selling it. But we've also made some decisions where we buy it thinking it's going to go up and then it goes way down. And we're like, well, crap, we can't sell it now.
Yeah.
And that's actually a really good mentality to have is you go, it's down, I'm not going to sell it. Well, if you're in options you might need to sell it and take a loss. But if you're in gold, silver, stocks, real estate, anything like that, just wait. It'll come back up.
Yeah. That's what I think, especially if somebody's just starting out off, totally have the investor mindset, like if you think trading looks cool or whatever, like start to educate yourself. But as far as taking action, take action as an investor.
Yeah.
Kind of with the mindset that I'm going to buy this and I'm never going to sell it.
Yeah.
And down the road, if you accumulate quite a bit and you have a business you want to start, or like you said, a property or something that you want to buy, then maybe it's time to sell it and move into something else. But I think that investor mindset when you're starting off it's basically a savings account.
Yeah.
I agree. Just buy it and learn about it and continue to learn about it. And then you can get more advanced as you go down, keep moving into that.
And that advanced can come from gains in that primary account. So, if it's just buy and hold, but it goes up 10% and you're like, I really want to try out trading. Maybe take that 10% or even less, 5%, 4%, take that and play with trading on gains. That way you're not really losing it. You're not losing anything. You learned that small section, that foundation, and then it's like a pyramid. You have to have that foundation very well ingrained before you can continue up. So use some of that percentage to go off and try trading, and maybe you'll lose it. That's okay, because it was some gains.
And be okay with losing it.
Absolutely.
Don't play with money that you can't lose. You're not putting the rent money on the line and that kind of stuff.
Very true.
There's also paper trading accounts. So you can set up, if somebody's going to set up a trading account with like Ameritrade or something, a lot of those companies have accounts that you can switch over and you can just trade and actually put the orders through like you would and track it and learn about it and learn what it means to buy a put or sell a put, or even just buying and selling stock, and it will track it for you. It's really cool. If you don't have money to put in there right now, you can do that and start learning too. And I'd highly, that's a good way to go too, is just doing some of that in a fake account.
Yeah. I tried it. I couldn't. I had to do it in real life because I make astronomical risk. I take astronomical risk when I don't actually have any money up against it. I'm like, I'm gonna buy a put against Exxon in the middle of a war.
Yeah.
Terrible idea. No.
Yeah, I can agree with that. There is some value to having some skin in the game.
Yeah.
Even if it's a small amount of skin.
But take that skin, put it in the game, and then get a paper trade account and play with it. Because that's all education. And if the takeaway from today is invest in McDonald's but don't eat it, and educate yourself and then put it to practice, that's really what it's all about. Man, there's YouTube. We talk about it all the time. YouTube videos. You can find anything on YouTube. If you're listening to this, you've found us on Spotify or in iTunes. There's just so many different places to get this, and to really be specialized in that one area. It's really, really cool.
There's the best education that I've gotten in this, and I don't know if we're highlighting other,
No, I think it's awesome. Yeah.
Platforms or not, but this was a really great course. It's called Cashflow Academy.
Yeah.
The guy's name's Andy Tanner, and I just consider him one of my mentors. I've never met the guy.
Yeah.
But just incredible at teaching, and not even the trading part. Like that's part of it, but just teaching like what we've talked about, the value of investing and putting something in other than dollars, and what happens with the Fed, just all of it, how inflation works and everything. Like it's a lot of content, but it's an incredible course. I've been through it a couple times, and it's really good. So, and I think there's tons of them, not just that one, but that one is one that I've used that's really good.
And get your education from many different places. I actually would say don't take a word of what we say as gospel in any way. Like, don't believe a word that we say. Go out and find for yourself what it is. I took a course called Millionaire, not a course, it was a seminar called the Millionaire Mind Intensive. First thing he says, don't believe a word I say. I'm like, that's really cool. I just paid you money to come and tell me not to believe a word that you say. And he's just like, if you just do what I tell you to do, that's not the point of any of this. It's to learn it for yourself, like ingrain it in your soul, learn it. Then it's all good. You know, have you ever had people be like, oh man, just tell me what to do?
Yeah.
Like, should I buy now? Should I sell now? You know, I don't blame them, because I would love that too. If someone who was winning just told me what to do. But what's the fun in that?
Yeah.
I mean, yeah, you'd make some money, but we believe that making money is adding value to the world. That's why if you buy a put option, do it against a company that you don't like.
Yeah.
Then you're adding some value to the world.
Yeah.
So,
Yeah, there's kind of we live in an advice culture.
yeah.
That they want advice on what, people want advice on what stock to pick.
And people want to sell the advice.
Yeah.
You know, something that our thing is, like,
Very
this
true.
podcast, I think, well, I know will always be free. Then there's some specialized stuff that will happen and is coming up that it'll cost a little bit. But actually, I want to say it will cost a little bit.
Yeah.
You know, an ebook that's $5.99, but full of some content that if you buy it, I feel like I'm being a salesman right now, and I'm not trying to be. Like, and a salesman's not bad.
Well, and I think that there's a difference between back to the advice and education. There's a difference in selling advice and saying you should buy and sell this stock and this stock, this stock. And there is some stuff out there, and it probably does good. I have no idea. I've never done any of that kind of stuff. But then, like, personally, I pay for education. I don't pay for any advice because I want to learn the principles so that I can figure it out for myself.
Yeah, I'm right there.
And so I'm more than happy to pay for education.
Yeah.
I'm pretty skeptical to pay for advice and even take advice.
So I did it. I won't say what the website is, because I think that it's meaning, like they're meaning well. But they have an algorithm that kind of shows you what cryptocurrency is trending on, like, Twitter and Instagram and TikTok and all of that. Well, if it's trending, it's probably going up. So I just would watch that, and it actually worked. Like, it made decent gains here and there, but I didn't like it, because it was like, I'm just doing what they tell me to do.
Well, but even then, I wouldn't consider it as advice.
No, yeah, you're right.
That's
This was not
education.
advice.
You're using that as a tool.
Well, I would have considered it more education if I knew the algorithm.
Yeah.
But because it was their proprietary algorithm and I couldn't see it, it was like, man, what if? And this is, I do not believe that this is what the company is doing.
Yeah.
But what if they were like, hey, we want to
Doing the
make some
opposite.
money.
Yeah.
So let's say that ABC crypto is trending, but before we do it, let's buy a bunch.
Yeah.
And then all of a sudden they're manipulating markets, which is illegal, but happens all the time.
Yeah. Yeah.
So, yeah, that's a little bit off in the weeds. So,
I think the one thing to take away, we said go out and educate yourself. Don't believe a word we say.
Yeah.
The one thing I would say believe is it is worth it. It's valuable. It's worth it to invest. That's the important takeaway is there's a lot of value, and it's important to invest.
Yeah.
And it works.
Yep.
The weirdest thing, like it works. Like, you can believe that if you start doing that, it'll work.
Do you have the book? It works?
I have.
It's
yes.
this
You gave
big.
it to me.
Oh, okay,
I read
cool.
it. Yeah, I read it.
I ordered like 30
It's really
of them.
good.
It is so
I
good.
read it, and I listened to it on YouTube.
I need to listen to it again because it does work.
Yeah.
Okay, let's do a podcast on It Works.
Sounds
so
good.
we need to do one on the Federal Reserve and government and corporation collusion and corruption, and on It Works.
I was thinking too, we kind of set out to talk about different asset classes.
Yeah.
And we kind of hit just a couple, but we talked about more like the kind of why to invest more so than what is gold and silver and crypto and stocks. So we ought to do
that.
one on those ones too. So
We can actually do that
we
as
write all those ideas down.
as a series. So you could go, even we could have a couple episodes in between the others if we're, educating ourselves, education.
Yeah.
On those classes, you go, hey, the first one we're going to do is what is sound money?
Yeah.
And that's in the asset series. Mm-hmm. So
Yeah,
that'd be
I like
really
that.
fun to do. I like
Would
that.
be. And it'd be, funner to dive in on a very
Yeah.
kind of specific topic.
I agree.
Let's do it.
Okay. All right, so you can expect that.
Yeah.
Well, thank you, Matt. I appreciate it as always. It was just a good time.
It was.
So
it's fun. The
Sweet.
time flies by when we do this.
It does. I know. I was like, yeah, maybe if we can keep today shorter, like 30, 40 minutes, and it's almost an hour later. It's all good.
Sweet.
Just people working right now, and I'm in here having a good time, and they're out in the 0-degree weather working on our house.
Oh, shoot.
Good people.
Yeah.
And,
Cool.
and that's something to just surround yourself with good people.
Absolutely.
Like with this investing stuff, don't get in on people that are trying to make a quick buck.
Yep.
Long term, like you were saying. Just think of it as an investor, not as a crook. We don't want to invest in crap like that. We want to add value to the world. So invest in companies that you believe in. Invest in things that are exciting to you. And really, it can't go wrong.
Yeah.
Can investments go wrong? Yes. But I'm talking in our mind. We've invested in something that we love. So
For sure.
sweet.
Cool. Sounds good.
Okay. Have a good day, Matt. We'll see you.
See ya.